Yesterday, both the euro and the British pound corrected against the US dollar. The European currency broke above 1.0950, trimming losses incurred on Monday. The pound sterling edged higher in choppy trading, hitting a new weekly high, but then came under pressure again. As for today's fundamental factors, the focus of sterling traders is data on UK consumer prices for March, which has already been released. On a monthly basis, CPI inflation was 0.8%, above a consensus of 0.5% and down from the February reading of 1.1%. On an annual basis, UK inflation failed to fall to single digits in March, dipping to 10.1% from a jump of 10.4% in February. Against this background, the Bank of England will be forced to keep tightening policy aggressively, which in turn will continue to support the British pound. Furthermore, today's macroeconomic calendar includes data on inflation in the euro area. Monthly consumer prices are estimated to have risen by 0.9% in March, following a 0.8% advance in February. Euro area annual inflation is expected to be 6.9% in March 2023, down from 8.5% a month earlier. If the indicator exceeds analysts' forecasts, the euro will have every chance of extending gains, at least in the short term. After all, this will confirm expectations of a 50 basis point interest rate increase. In the second half of the day, traders may take notice of speeches by ECB and Bank of England members. Interestingly, today's calendar is bereft of any important releases from the United States. Therefore, data on inflation in the euro area will act as a determining factor for the market's further direction. And now let's move on to technical analysis. According to the 1-hour chart, the euro-dollar pair is trading within the range of 1.0946 to 1.0983. A false breakout at the lower boundary of the range will create a buy signal. In this case, the euro will head towards 1.0983. If the price breaks through, consolidates above and tests this level from the top down, it will be possible to go long, counting on recovery to 1.1027 and then 1.1071. At the level of 1.1071, I recommend going short on a rebound. Short positions at 1.1027 and 1.0983 can be considered only amid a false breakout, as bears are clearly trying to keep control of the market. In the event of subdued trading activity at 1.0946, the price may well break through, fix below, and test this mark from the bottom up. Thus, a sell signal will be generated. In such a scenario, bears will drag the euro down to 1.0913 and probably 1.0867. At these levels, it would be a wise decision to buy the pair on a rebound to catch an intraday correction of 20-25 pips. Speaking of the British pound, a false breakout at 1.2412 following data on inflation will create a strong buy signal. In this case, the pound sterling is expected to advance to 1.2447. If the price consolidates above this mark and tests it from the top down, the way to 1.2483 and 1.2519 will open. At these levels, traders are recommended to go short on a rebound in the hope of an intraday correction of 25-30 pips. If bears are able to maintain control of 1.2447 or the price returns below 1.2412, the British currency will enter a deeper downward correction heading for 1.2381 and even 1.2353. At the level of 1.2353, it will be possible to open long positions on a rebound, while going long at 1.2381 will be relevant only in a case of a false breakout. Best of luck!